All right. Well, if either of you had specific questions, we can actually go ahead and get started if you'd like, and then maybe some other people will join as we go here.
I had if you're asking me, I had a question while I was doing some homework.
Okay.
And let me grab it. Question. Sorry, I didn't expect to start right away, but
That's okay.
So bear with me. There was a question related to retained earning on one of the questions on homework.
Okay.
That retained earning, what it would be, and calculate the net income out of it.
Okay.
And it had reported the dividend and stuff like that. And I was just curious, which I figured it out after reading it, that dividend needs to be part of the equations, even though I had before and after earnings.
Okay.
I had a starting retained earnings and the end of retained earnings, and then we had a dividend and calculate from there the net income rather.
I see. Yep. Yep.
So the question, what got confused me, that dividend was declared and paid.
Okay.
And some reason or the other in my mind, it was stuck in my mind that if it is declared, then you calculate toward the end of the year net earning.
Okay.
But if it wasn't paid, it was paid, I didn't know. But then I saw the example that declared and paid means it needs to be part of the equation.
Right. Right.
Starting earning plus net income minus dividend equals the end of the year.
Yep, that's exactly right. So if we think about our statement of retained earnings,
right,
one of our 4 basic financial statements, right? So that would be for period end, such and such. Whoops.
Right, yeah.
So that's always going to start with our retained earnings balance at the beginning of the period, right?
Right, right.
So let's say, for argument's sake, that's $1,000. Okay. Then we're going to add any net income we had,
right?
If any, right? If we actually earn positive net income,
right? Yeah.
And then we take out any dividends, and this is declared regardless of whether paid.
It's paid or not. Oh, okay.
Yeah.
That's what confused me. Because in the homework example in the book, I didn't see, I only remember declared, but then I saw the book example that it says in the pizza aroma that is a declared and paid of 500. Then I figured out that it probably doesn't matter. Declared is what you count.
That's exactly right. So if we've declared them, they're going to reduce our retained earnings, regardless of whether we've actually paid them. So the only difference would be if we've declared but not paid them, we're going to book a journal entry for dividends. What I say it was $100, and we're going to have dividends payable.
Right. One is the expense, one is the liability.
Right. Exactly.
Okay.
Whereas if we declared and paid them on the same day, we still got dividends for $100, but now we just have cash. Right.
Right. It's only cash output.
Right, so the only difference there. So it's always going to be that debit to dividends, which is going to reduce our retained earnings.
Right.
And then whether we've paid or just declared will only change that second part.
Yeah, the example you posted, the first one is the dividend expenses and then liability toward this and to be paid some point in time.
Right.
And second one, which you declared and paid out of cash, and cash goes negative.
Exactly.
So it's a reduction in asset in both cases, plus minus.
So say that last part again.
The reduction plus A minus A. Out of cash flow. Out of cash rather.
Right. It's a reduction of assets here.
Asset, right.
But there's
and the first one is output of asset, right?
No, dividends. Dividends are contra stockholders' equity, right? Which has the effect of a reduction in stockholders' equity.
Right, okay.
Yeah. So this one up here, right, is a reduction in stockholders' equity, an increase in liabilities.
Okay.
Right.
So the way it is reported, unless this is missing, then let me just bear with me. There was an example I saw in the book. Other people who can ignore when I do that. There is a, I don't want you to read through, but there is a section, page 166 of the book. In that case, there is adjustment of dividend, which is 500, and then it should have been reported expensive also, right?
Let's see what we're doing here, 166. So 166, okay, in 166, they're just closing the temporary accounts.
Oh, go 162, sorry, 162.
Oh, okay, sure.
Look into dividend center in the bottom, which refers to item I.
Yeah.
And that item and the first column, which refers to item I on the top.
Yep. Yep. So that means we paid cash dividends during that adjustment.
So which is your second example in the
exactly.
Okay, I see.
Yep. So
see, the confusion on my part is that when you say stockholder equity reduce, I was looking into equation A equals L plus SE and reduction in SE category, but it's necessarily same thing.
Oh, yeah. No, you're right there, right? So if we say assets equal liabilities plus stockholders' equity, right?
Right. So you don't report that first item in stockholder equity, you report in asset being reduced.
Right.
So
our cash has decreased.
Right.
Asset. Also, our dividends have reduced our stockholders' equity.
Right.
So we're still in balance.
Okay, I get it. Okay, good enough.
That's a good question, yeah. Always have to be in balance for every single transaction we book, right?
Yeah. Gotcha.
Did you have other questions related to that part, Bharat, or?
No, that was it. I think it was a confusion, and first one you already explained about before, but this example shows even better.
Sure. Well, in that case, what else do you guys have?
Well, if I can, I've got some sort of abstract questions.
Okay.
Totally off the homework. The exam, if you told us how long that was going to be, I've forgotten.
Yeah, that's okay. So I've allowed for 2.5 hours at the testing center.
Okay.
Most people won't take that long, but you're welcome to use that full time if you need it.
Okay.
So go ahead.
Are we going to have to prepare statements? Because that I am like snail slow at doing that.
Okay. To answer that, I'm actually going to shoot over to Blackboard on my screen here. I just want to look at exactly what I told you for the exam and make sure I clear up anything for that. So, yep. So I did post on Blackboard here an announcement, a breakdown of the test. So the first part of the test is going to be account identification. So literally, I'm going to give you 10 account names like cash, accounts receivable, et cetera, and you're going to tell me what type of account they are. Okay, whether they're normal balance. Go ahead.
Go ahead. Let you finish that.
Okay. Whether the normal balance is a debit or credit, which financial statement or statements they would appear on, and whether that account is permanent or temporary.
Okay. Oh, I see.
Okay. So actually, tell you what, let's do a quick one of that to make sure.
Yeah, I like to see that one.
Yeah, absolutely. So we're saying account type, normal balance, financial, statements, and then permanent or temporary. Okay, so literally I would say, we'll start with cash. We certainly do a couple. So what kind of account is cash? What type? It is. Yep. So what's its normal balance? Is that debit or credit?
Debit.
Good.
Debit.
Which financial statement or statements, plural, do I see the cash balance on?
Balance sheets.
I do. Any others?
Balance sheet. Cash flow.
Yeah. Good.
Oh.
It's easy to forget that one. Yep.
Yeah, not much example of that.
Yeah. And is cash a permanent or a temporary account?
Permanent.
Permanent.
How do I know it's permanent?
Well, one hopes one always has cash.
Well, that's
It
true.
does post out.
That's true. What's another way I know it's permanent?
What was the first way he said?
She said one hopes you always have cash.
Okay. Okay. The part, it is part of the balance sheets. Balance sheets are always going to carry
Yeah,
over.
good. So my balance sheet accounts always
That
permanent.
is good. Right.
Anything I find on the balance sheet's a permanent account. Anything else is temporary.
Right.
Right? There's not a lot of magic involved with that cutoff, right? If it's on the balance sheet, it's permanent. If it's not on the balance sheet, it's temporary. So let's take, I don't know, rent expense. What account type would I assign to that?
Stockholder equity.
Yeah, or expense is fine. Yep.
Expense, okay.
Yep. Normal balance of an expense account?
Debit.
Yep.
Good. Where do I find expenses?
Statement of
Balance sheets.
Balance sheet?
Oh, expenses, no, income statement.
Income statement. Good. So are those permanent or temporary?
Temporary.
Yeah.
Very.
Again, if it's not on the balance sheet, it has to be temporary. How about one more here? Notes payable. What kind of account is notes payable?
Liability.
Good. What's the normal balance of a liability account?
Credit.
Credit.
Good. Where would I find liabilities?
Balance sheets.
Good. Are liabilities permanent or temporary?
Permanent.
Good. Okay, so that's all that section is, 10 of those.
Oh, I see.
Okay.
Okay.
Any questions about that?
No.
Let me ask you this one.
Sure.
Accrued depreciation. Accumulated depreciation.
Okay, good. Yeah, let's do that one. Accumulated depreciation, account type. What do we think about that one?
Well,
If the stock is I don't know, is the expensive liability.
Yeah, that one's a little tricky, right? It reduces the fixed asset account it goes with.
Right.
So we say it's actually a contra asset, right?
Oh, okay.
That one's a little funky. We don't have a lot of contra accounts, but that's one of them.
and that's the type. It's considered a contra asset account.
Yep, contra asset. It reduces our asset total.
Okay.
Okay. So if it reduces our assets, what should the normal balance be, probably?
Credit?
Yeah, good. Where might I find contra assets?
In balance sheets?
Good. Okay. So is that permanent or temporary, do you think?
This is accumulative, so it's a permanent.
Yeah, exactly.
Exactly.
Yep. Again, if it's on the balance sheet, has to be permanent.
Permanent.
So our contra assets a little bit funky, but bottom line is they reduce our asset total. So they are permanent accounts. They do sit on the balance sheet, but they have a normal credit balance because, again, they reduce our total asset amounts.
Right.
Does that make sense?
Yep.
Okay.
Yep.
Good.
Same thing, dividend. How about that?
Oh,
I
sure.
think both of them are confusing for me anyway.
Sure, no problem. So dividends, again, a little bit different account type. we call that what do we call that?
Dividend is expense.
It's not expense. Be careful with that, right? It acts like an expense, but technically
it's a stockholder equity, I guess.
Yeah, technically it's a contra stockholders equity. Reduces stockholders equity, so it acts like an expense, but we don't see it on the income statement because it's not an expense. So normal balance of dividends would be what?
Debit.
Yeah, good. And if I don't see them on the income statement, where do I see them?
Balance sheet.
Not on the balance sheet.
You don't see it on balance sheet. You see it on the
Retained earnings.
Yeah. That's the only place I see dividends is the statement of retained earnings. So is that permanent or temporary?
This, like dividends is given one time, so it's gone, so it's a temporary. I don't know.
Yeah, what you said is fine, Bharat. Basically, all you need to remember, though, if it's helpful, is that, again, if it's not on the balance sheet, which this is not,
okay. I got
it
you.
has to be temporary. Yep.
But my logic was right, though, right?
Oh, absolutely. Yep, absolutely.
Okay.
Just the major cutoff, always try to keep in mind, if it's on the balance sheet, it's permanent. If it's not, it's temporary. 100%. Go ahead.
Good.
Oh, okay. Any other questions on our account types and such?
No, I think we have a few more other ones to go before come back to you, but
Okay.
that's good.
Sure.
Good thinking.
Sure. Let me just look back here and make sure I didn't lead you astray here. Okay, yeah, so that's all that was for part one. Part two is going to be 15 multiple choice and true false. Most of those are going to be kind of definitional, conceptual, and by that I mean not a lot of calculations, right? I'm not going to have you do a lot of number crunching in those. It's more just about
which one of these statement is correct. Is that something?
A couple like that. Also, questions about our general accounting principles in terms of revenue recognition. So, for example, if I said to you, let's see, if I said to you, the question is, revenue is always recognized when it is blank, and the options I gave you were recorded, earned, estimated, or none of the above, you would tell me the answer is what?
It's earned.
Yeah, keyword is earned with that one. Always recognize revenue when it is earned. So those are the types of questions. I mean, they're asking
fill the blank.
Yeah, there's a couple like that.
Statements, I tell you, statements, when you get the statements, it's getting confusing.
The
so much similarity. Statements, you say that which statements in the one of the following statements, which one is correct, and you have blah, 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 credit, blah, blah, blah.
Yeah.
Yep. Like in the homework, there's a lot of confusion.
Yeah, and actually, I'm glad you mentioned that, Brad. There'll be, let's see, there will be none actually that are exactly like that, where I give you 4 and say how many of those are true.
True, right? Yeah.
Yeah, I don't
1 or 2 or 3, and you know,
I like that they make you think, but I don't necessarily like the fact of how you arrive at an answer, maybe. So I tend to stray away from those for the test.
Good.
Yeah.
Thank you.
So that's multiple choice and true false. Part 3 is where we're starting to get pretty serious here. So part 3, I'm going to give you 10 transactions, similar to some of the ones you've seen in Connect and certainly in the textbook problems as well. And I'm going to have you book journal entries for them. I'm going to give you the analysis template on the test, but you don't necessarily have to use that whole thing. As long as you book the journal entry in kind of standard form, that's going to be fine. Okay, and then let's see, you're also going to take those journal entries you booked and you're going to post them to T accounts, to ledger accounts. So I will give you the ledger accounts and the nice little neat T's, and you'll have to post them from whatever you booked in your journal to those ledger accounts.
Do you expect to fill a blank or anything, or just? You have a couple of blanks on the T account and just post it?
Yeah, the T accounts are actually, with the exception of some beginning balances, they're actually entirely blank.
Okay, so
So
fill that in.
it'll
Okay.
just depend on what you book for your journal entries.
Okay, I see.
Okay. So you will post those to the ledger, again, your T accounts, and then you'll also tell me, you'll give me totals for your cash flow categories. You're not going to do a full statement of cash flows, but I would expect you to know what constitutes operating, investing, and financing, right? So as you're booking the journal entries, be thinking about which category those would fall under, because you're going to give me a total for how many dollars were considered operating, investing, and financing.
Is it possible, since we haven't seen that many examples of cash flow, that given what you just said, which particular accounts or which particular entries would be cash flow, financial activities, or
Sure.
one of those?
Sure.
Do you have any?
Yeah, while we're on the subject, let's go ahead and talk about that for a minute, and then maybe even do some journal entry examples to put that together. So we have the three categories, right? We have operating, investing, and financing. Okay. So in general terms, the things we consider to be operating activities are activities for the, I call it, the daily running of the business. So this would be payments from customers, payments to suppliers, payments for basic expenses, things like that. Okay.
Yeah, I got it.
Yep. Investing, on the other hand, would be purchases of fixed assets. So that's our property, plant, and equipment, right? What else could be investing? Sales of those fixed assets. If we turn around and sold some land, that would also be investing. Or if we loaned money to a third party and that wasn't our primary kind of form of business.
How about account receivable? That would go in operating, right?
If when you say account receivable, do you mean we got a payment on an account?
Right.
Yes, that would absolutely be operating.
Okay.
So payments from customers, whether at the time of sale or on their accounts, always are going to be operating. Yep. And then financing is going to be anything to do with issuing new stock for cash, also paying dividends, borrowing money from the bank, and repaying that money to the bank. All those things are financing. So anything to do with our stock, issuing that stock for cash, paying dividends on those shares, and then anything to do with borrowing or repaying money from or to the bank.
Okay. Good.
So I'll jot down I don't have one in front of me for like a book example, but let's just hammer out a few journal entries to kind of practice that. So if I said to you, borrowed $20,000 from the bank, signed a 5-year note for that loan. So what would you book for a journal entry? Let's do debits and credits here. And then we'll determine what kind of activity that is for cash flow.
Debit cash for $20,000.
Okay, so I debit cash $20,000.
And credit notes payable for $20,000.
Perfect. Okay, so debited cash $20,000, increased my cash by 20. Increased my notes payable by $20,000. I have a new liability here.
Right.
So in terms of my statement of cash flows, what type of activity would we consider this?
Operating. No.
No, financial.
Yeah, we consider that financing. And for just completeness sake, we'd say that's a financing inflow, right? We received cash.
Get the money in, okay, okay.
So the flow of cash is inward, increase to cash. Excuse me. Okay. How about if I said paid $500, whoops, on my Lowe's contractor account for supplies previously purchased. I apologize if that wording is kind of funky, but paid $500 on account to Lowe's. What would I debit? What would I credit?
It would be account payable.
Was it purchased this month or last month?
Does it matter?
As long as the transaction is the same month, not.
No, I mean, that's a good question, but does it matter whether I made that purchase yesterday on account or 6 months ago on account?
It should not be.
No, you're right. Accounts payable is not going to be affected with accruals.
Right.
It is.
Yep.
Yeah.
So we are debiting accounts payable, which is what you said, Susan. So we're reducing our accounts payable, right? We owe $500 less to Lowe's now, okay? And what are we crediting?
Cash.
Yeah.
Cash.
Made that cash payment. Perfect. So if we made a payment on account to Lowe's here, what do we consider that on the statement of cash flows?
Operating, I think.
That one's operating. Yep. Inflow or outflow?
Outflow.
Yeah. Just follow the direction of cash there. Good. How about, let's see, purchased land for $10,000, cash. What would we book in our journal for that transaction?
Land expense?
Land, just land, right?
Right,
Right.
yeah.
Yeah. What kind of account is land?
Asset.
Okay, good.
And 10K?
Yeah. And what's my credit?
Cash.
Cash 10K.
Good. So statement of cash flows, what do we call this type of activity?
Financing. Investing, I think.
Yeah.
Investing, not financing, sorry.
That one tends to be tricky. That's okay. So if we're purchasing any fixed asset, so land,
Right.
equipment, buildings, etc., we do consider that an investing activity, investing in our fixed assets. Yeah.
Define fixed assets for me, please.
Fixed assets, basically AKA PP&E, property, plant, and equipment. So any long-lived asset that we're going to depreciate or hold for an infinite amount of time.
Okay.
How about one more here? Let's say we, what did we do? Provided $5,000 in lawn care services to customers, receiving all payments in cash immediately. What would I put? Sorry?
Debit cash 5,000.
Okay, debit cash 5,000. Credit.
Revenue.
Sure, any kind of revenue will do. Service revenue, lawn care revenue, whatever you want to call it.
5,000.
And what type of activity is that on our statement of cash flows?
Operating.
Also operating, good.
Inflow.
Oh, yep, sorry.
Cash inflow.
Correct. Oops. Yep. Operating inflow there, right? Received cash payment for services just rendered. So again, that's our normal conducting of business, so we consider that an operating activity. Our cash increased from the payment, so it's a cash inflow on that statement. Yeah. Excuse me. Any examples you can think of off the top of your head that you saw that maybe were funky in terms of this, or?
Would that be any difference in prepaid or on income? I don't know. It probably would fall into the same way.
Oh, no, yeah. Brock, that's a good question. So how about I said received $2,000 for lawn care services to be provided 3 months from now. What do I book for that?
Cash 2,000 debit.
Cash 2,000.
Yep, still have my cash for 2,000.
On income.
Say that again, Brock.
On income.
Yep.
Revenue of 2,000.
Exactly.
That would be. Would it be still cash inflow or not? It would be, right?
Even though
we haven't received it.
It's still inflow. What type of activity is it, do you think?
Still operating.
Still operating.
Still operating, okay.
So it's
this is what I wasn't sure whether we haven't received it. How do you categorize?
Sure,
Okay,
no, that's a fair question. So we still consider it operating because it's still conducting our day-to-day business. It's still the primary way we earn revenue, right, is this lawn care service. It's just we're getting paid in advance. So from a statement of cash flow perspective, we still always consider that type of thing operating.
Operating.
Yeah.
Good.
Yeah, very good. So we didn't say this, I guess, but what type of account is unearned revenue?
Liability.
Yeah, good. That's an easy one to mix up. Unearned revenue liability. We owe, right, some future service. Excellent, excellent. Let's see. Are there any other entries you want to kind of talk about while we're here on this?
I think you covered it unless you think of something unique that we don't know.
Yeah, I mean, I feel like off the top of my head, this is representative of a lot of types of things you would see. I mean, we certainly haven't exhausted every single kind in terms of like dividends and things like that, but you have done some other ones of those. So maybe we'll leave this for now and we can always come back.
Okay.
I want to make sure we don't forget anything from the test setup here.
Right.
Okay, so you'll be booking 10 of those transactions, and then you'll be posting them to ledger accounts, and then again determining the amount for the statement of cash flows. So are you okay with posting to the ledger accounts, or do you want to talk about that at all?
That's what you are doing.
Here we're booking journal entries, right? Then you're going to post the results of these to the ledger account.
Yeah, can you give a couple
Sure,
of
yeah. So let's do this at least. Let's look at our cash T account, and we're going to post all of the entries we just booked into our cash ledger account, okay? Let's at least do that and then see where we are. So let's assume for argument's sake that our beginning balance in cash was, I don't know, $50,000. Okay, so for letter A here, I had borrowed $20,000 cash from the bank on that 5-year note payable. So how am I going to post that to my cash ledger account?
That's in the positive debit account.
So which side is debit?
On the left.
Yep, good. 20,000. And then again, for your own sake, make sure you put some kind of reference, just so you know where it came from, right? Either a letter or a date or something to trace back if you need to.
And notes payable liability account, that will be next T.
Yep. So let me stick notes payable up here. See, hopefully this won't get too cluttered up. We'll probably skip some here, but let's at least illustrate. Yeah. So that's also letter A. Okay.
Beginning J and A would be 20,000 on positive right side.
Correct. Yep. So here's my notes payable. I've got that credit for 20 and then my reference A there to trace back to that transaction. And that matches letter A right here.
Okay.
Okay, so then in B, we paid $500 on my Lowe's account. So we had an accounts payable debit of 5 and a cash credit of 500. So what's that going to look like in cash?
Cash on the right side, 500 against the right.
Good. And
And on
then
the left side, negative on account payable, I guess.
yeah, again, I apologize if this looks a little funky. I'm trying to squeeze them all in so we're not scrolling a whole bunch. So there's my $500 account payable debit. Okay. Okay, so that's that one.
Wait a minute. We already paid that amount. Would it be account payable would be on the credit side or debit side?
Whoops. Sorry about that. Right, you're right.
You waking us up or something?
I got yeah, I was testing you and you passed. So really we want debit 500. Yep. Good. Very good. Okay, so then we purchased some land for $10,000. So we had a land increase of 10 and a cash decrease of 10. So what's that going to look like in cash here?
10,000 on credit side.
Yeah. Letter C. Maybe I'll skip the land account for now so we don't get too cluttered over here.
Right, okay.
Okay, but we'd have the debit side land for 10. How about provided $5,000 in lawn care services for cash? So we had cash 5, service revenue 5. What's it going to look like in cash?
At 5,000.
Good. That was letter D. And again, let's skip revenue just for now. So then our last one, we had cash of $2,000 for unearned revenue. So what's that going to look like for cash?
2,000 on the left.
2,000 on the left again. Letter
And unearned would show the differently.
unearned would show 2,000 on which side?
Right.
Right side. Good. Okay. Yep. You guys seem to be good on that, but debit's always on the left, credit's always on the right. Doesn't matter what type of account you're looking at. So let's do this though. Since we have a bunch of activity in cash, let's come up with an ending balance. Make sure we're good on that. So how do I determine an ending balance for cash here?
Add up the debits and credits and subtractions.
Yeah, we'll just add up all the debits. So that looks like 77,000. Add up all my credits, 10,500. So my ending balance is going to be on which side?
Left.
Yep, debit side. So the difference between those two, 66,500. Okay, and then we probably do the little line there to show the balance. Okay. Is that, are we okay there, or does anything else pop up as we're looking at this that?
Oh, I think pretty good.
Okay. It's for the most part, it's at least fairly straightforward, but it is kind of tedious, right? So it's a matter of kind of just being careful that you're matching everything up left and right.
Unless you do it real writing down, then it is very confusing.
Yep. So on the test, by the way, I did put the journal entries on one page, and then I skipped the back of the next page and put the T accounts on the following page so that you didn't have to be flipping back and forth, front to back, front to back, front to back, front to back. So I at least tried to give you a break there.
Is it, let me ask you this one, but is it a hard copy book or is it on the computer?
Yeah, the test is paper, yep.
Is the paper?
It is, yep.
Is it open book or what is it?
It is not. There's no notes, or books.
Okay, all right.
Yep. Okay, any other questions on the T accounts for now?
I'm good.
Okay. Let me shoot back over and make sure, again, I'm staying kind of on track here. Okay, so we talked about booking journal entries, posting the ledger, and we talked about the statement of cash flows. Okay, so part 4 then, I'm going to give you an adjusted trial balance, and I'm going to ask you to come up with certain measures from the financial statements. So things like net income, total current assets, total current liabilities, maybe total fixed assets. I might also have you prove that your balance sheet equation is in balance. Okay, all from the adjusted trial balance. Okay. So how does that strike you? Does that bring up any questions immediately that you're... So for example, if you had a trial balance in front of you, like the one on page 163, if you happen to have your book right in front of you, 163.
Got it.
Okay. If you had that adjusted trial balance in front of you and you didn't have the financial statements to the right, and I said to you, tell me what net income is, how would you go about doing that?
I think you just go the revenue minus expenses on the bottom.
Yeah, exactly.
As it should be.
Exactly. So the adjusted trial balance, right, is the source for all of our financial statements.
Right.
So if I ask you for net income and you have that, just because you haven't built the income statement yet, all you have to do is take any revenue accounts you have minus any expense accounts.
I hope you don't give us this many numbers. You want to check us whether we know it or not. Too many numbers cause more problems.
No, I feel pretty confident that it's not too voluminous, if that's the word. I didn't get too crazy with it. I think you'll be okay with it.
All right.
Okay.
One thing to keep in mind while we're talking about the trial balance, right? Just because it's, it's stated at a few points, but I want to make sure we're clear on it. So trial balances, how many trial balances do we put together every period?
A minimum of 3.
Yeah, what are those 3?
Well, you've got the the trial balance before adjustments, so just your total volume.
Yeah, so we call that unadjusted, sure. And then we have
your adjustments, and then you have one after your adjustment.
Yep, post adjusted trial balance. And then what's our third?
The final trial balance.
Yeah, we call that the post-close.
Post-close.
Yep, after closing, right?
Am I going to have to remember those names exactly like that?
No.
Okay.
Although I would ask you this, which of these 3 do you use to put together your financial statements?
Post-close.
Adjusted.
Yep. Adjusted, yep. Post-close, we've already done the financial statements and we've already closed the temporary accounts. So
post-close is just to close the temporary account and put everything in the next year earning.
Right, so post-close will show all our temporary accounts with what balance?
0.
Yeah, 0. Yep. So our adjusted trial balance is the jumping off point for our financial statements.
Unadjusted is to check the credit and debit.
Before we do adjustments, yep.
Right.
Exactly. So the purpose of all 3 is just to prove at various stages that debits equal credits, right? That's really all the trial balances do. They don't tell us we haven't made any errors per se. They only prove that our total debits equal our total credits.
Right.
Okay, just so we're clear on that. All 3 of these also have the same format, right? Just debits and credits in the same order of accounts. We always show our assets first, then our liabilities, then
stockholder.
Good. Then
dividend or
we can put dividends there, sure. Then what?
Stock earning, retained earning.
Revenue, yeah.
Revenue.
Then
how about retained earning? Doesn't it go retained earning there too?
Yeah, where would retained earnings be of the ones I've listed here?
I think it should be before dividend.
It'd be part of stockholders' equity, right?
Right, exactly.
Yeah.
Okay.
Yeah. So then dividends, revenue, and finally
expenses.
Good. Sometimes you'll see dividends at the bottom, whichever.
Oh, I see. Okay.
Doesn't make a difference to me.
Okay.
Okay, but always our balance sheet accounts first, and then our temporary accounts.
Right.
Okay. Any questions on these?
No.
Okay. Let's see. So we talked about this part here. Oh, I did say also I would ask you to prepare closing journal entries based on that same trial balance. Okay, so if you're still looking at that adjusted trial balance on 163,
Okay.
which accounts on there would you close?
All the temporary account.
Yeah, which ones are
all
temporary?
the red ones. Pizza Revenue and all the ones
Oh, yeah.
are red.
Yeah, and there's also one that's not red, isn't it?
One is the dividend.
Yeah, dividends is some other color there,
Right, yeah.
at least in my light over here. So let's talk about that for a second. So if I told you to close all of those temporary accounts, how would you do that? How would you close your revenue accounts?
You'd
You
post
have?
debit to all of the revenue accounts.
Yep, so I've got pizza revenue, so I'm debiting that 15,700. And that's my only revenue account. What am I crediting?
Stockholders' equity would be the retained earnings.
Yeah, there we are. Perfect. Okay, so remember, we're always closing our temporary accounts to retained earnings.
Oh, okay.
Okay. How would you close the dividends account for Pizza Aroma here?
It also retained earning, isn't it? All of them you're changing it to retained
Yep,
earning.
we're closing everything
Backwards
to
on the
retained
front.
earnings. So what am I doing to retained earnings for dividends? Am I debiting or crediting retained earnings?
Debiting.
Debiting.
I am, which means I'm crediting my dividends, right? $500. Okay. How about my expenses?
You're going to credit all of those
Credit all my expenses and debit
retained earnings.
retained earnings. Good. So we had, oops, wages, rent, supplies, depreciation, utilities, advertising. I'm abbreviating a lot here. Interest, income, tax, and that's it. So we'd be crediting all those for whatever balance they had. Remember, closing, we want to get their balance to 0 to go forward to the next period. So whatever they have, we're going to credit, whoops, that amount. And then we're debiting that total over here to retained earnings. Okay.
And you break these out separately just for clarity's sake rather than just make one net to retained earnings?
Yeah, I actually don't mind if you do it that way either, of course. I mean, it's certainly not incorrect. I tend to group them by the category. Sometimes the book does too. I feel like they're inconsistent with that. So yeah, either way is fine. If you only had retained earnings hit once and you had all these combined, that's fine.
Okay.
Any questions about our closing here?
That's pretty good.
Okay. Let me zip back over here then. Talked about the trial balance, all those, closing. Okay. And then the last part, I'm going to give you not an entire trial balance, but some unadjusted account balances. And then some other information about some situations that took place during the month. And I'm going to have you book some adjustments as needed. So for example, I may say the unadjusted balance in supplies is $1,000, okay? And then account at the end of the month revealed that $200 in supplies was actually on hand. Okay. So if that's the case, Do we need to book an adjusting entry for this?
Yeah.
Yes.
Yeah, absolutely. What would we book for an adjustment?
Supplies expense of 800.
200.
Supplies expense of how much?
800.
800.
800.
And then what's my credit?
Supplies.
Supplies, also 800. Good. Good. So that's one example of an adjustment we could have. And again, we can certainly go through more if you'd like. I could dig some up. But the types of adjustments I'd ask you to do certainly wouldn't be anything that you hadn't seen in the textbook practice and or the Connect practice. Okay. So we had adjustments for things like prepaid rent, prepaid insurance, some of those types of things. We also had some adjustments for unearned revenue for situations where we had earned a portion of that going forward. What else did we have? We had some adjustments for income tax expense and things of that nature as well. Let's see. Well, that's it.
And the test only covers chapters 1 through 4. Is that correct?
1 through 5.
1 through 5.
Yeah.
Okay.
Yeah. 5 is technically fair game.
Okay.
Chapter 5 isn't a whole lot of number crunching, if you want to call it that. It's a lot of theory about SOX, Sarbanes-Oxley Act. There is a little bit in terms of financial ratios that you'll see at the end of the chapter. But it's kind of a, for lack of a better way to put it, it's kind of a light chapter. So it kind of gets sandwiched into these first 4.
Okay.
Any questions about how anything's going to work on the test or any of those parts I kind of went over there?
What do you mean how it's going to work?
I mean, do you have any questions about how it's set up, I guess, in terms of the breakout or?
I mean, each part is break out equally, I guess. Is that with equal weight?
Yeah, well, sort of. So part 1 is a little bit less because it's, it's just 10 accounts and you identify them. So that's worth a little bit less than kind of this second part. The third part, I guess the way it's outlined, it's hard to tell, but it's probably the biggest time commitment of all of them because you're booking journal entries and you're posting them and you're doing a couple little calculations about the statement of cash flows. So part 3 is actually weighted a little bit more just because of all the different parts within the part.
Okay.
With that said, do you have any other questions about material? Anything that you've seen on either any of the practice materials or?
In order to practice something or understand something, what is the best place? Like, I guess that's what you're trying to tell, to review or go over.
Yeah, so I always say to, as you're trying to kind of do the repetition to make sure you've got it down, I always say to make sure you do as many of the back of the chapter textbook problems as you can kind of tolerate, because all the solutions, again, are right out in Blackboard already.
Right.
And then I've posted in the Blackboard coursework folders several other practice materials for most of the chapters, and especially in chapter 3 and 4. Actually, I've got Blackboard open here. Let me shoot back out there in case you haven't seen this. So this is under coursework, chapter 4. So there is something right here called Chapter 4 Additional Practice / Test Prep. You see that? Mm-hmm. And the solutions are right under it. And then there's another one down here called Chapter 4 Comprehensive Problem and the solutions with that. So those right there, and I'll go ahead and click on one just to show you too. If it opens up for me here. Whoops. Here we are. So these problems, and they look pretty daunting when you first go in. They've got some setup info here, but basically they have you do the entire kind of start to finish accounting cycle in a way. So they give you transactions and some adjustments, and you book journal entries for all of them, and then you post them to ledger accounts, and then you do a trial balance, and then you do your financial statements, and so on. Okay, so again, those are very big problems, fairly time-consuming, but they're excellent practice, especially in terms of kind of that end-to-end sequencing, if you will, right? Mm-hmm. So booking the journal entry first, posting it to its ledger accounts, seeing how that affects the trial balance and the financial statements, okay? So those are very, very, very good practice for that. Oops. Okay. Other questions about any of that practice material or no? I don't want this. Let me get back to my, there we go. Okay, any other questions about any specific piece of material?
Well, I keep getting confused between accruals and deferrals.
Ah, okay. I'll give you a, or I don't know if this will make you feel better, but you're far from the first person to have that situation, Susan. So accruals, one way that I always think is kind of the best or most logical way to remember it. Accruals means I'm recording an expense or revenue, and the cash has not changed hands. Okay. Whereas deferrals, cash has already changed hands. Expense or revenue will be recorded later.
I hear you typing, but I'm still seeing the blackboard screen. I don't know.
Oh, okay. Sorry.
Yeah.
If it's me or not.
See, our blackboard is not visible to us.
I wonder why this thing. Do you see my spreadsheet now?
I didn't see your chapter either, but
no. All I've seen since you came to this blackboard screen is this.
I wonder
or your chapter coursework. That's what it is. That's the only screen you see.
Okay, let me, I'm not sure why it's hung up here. Let me, hang on one sec. Come on. There. Is that better?
Not yet.
Oh.
Seeing blackboard.
That's weird. It says you're sharing your screen, and I've got my spreadsheet up. I'll tell you what, I'm going to stop the share and restart it. See if that helps. So, share screen. I want book one.
Okay. Yeah.
Now I can see the
Perfect.
Okay.
Perfect. Now, I'm not sure it was saying you're sharing. Well, whatever. Okay, so again, accruals, we've recorded an expense or revenue, or that's what we're doing right now when we're booking the accrual, but cash has not changed hands. The cash is going to come or go later. Okay, whereas deferrals, just the opposite. Cash has already changed hands, or is changing hands right now, right? But the expense or revenue is going to be booked later. So We can do a couple examples here. So an example of an accrual, tell you what, so we don't mix them up. Things like recording wages expense before the payroll cycle hits, right? So if we've had employees working for a couple weeks, right, earning wages, we're going to record the expense for that regardless of whether we paid them yet. That's one example of an accrual. Okay. Also, we're going to record, or I'm sorry, if we are recording revenue for work performed where we haven't been paid yet. That's another accrual. So if I have a lawn care business, right, and I charge $50 a lawn, and I go and mow your lawn, Bharat, and send you a bill for $50, I'm going to record the $50 revenue from your lawn right when I mow your lawn, regardless of when you're going to pay me for it. So those are accruals, right? Deferrals, on the other hand, we're saying the cash is changing hands right now as we're booking the transaction, but the expense or revenue will be recorded later. So are all of our prepaid expenses, like our prepaid insurance, prepaid rent, prepaid advertising, I think we had in one of these chapters, those are all examples of deferrals, right? We're paying for the expense now in advance, but we haven't incurred the expense, so we're not going to actually book the expense until that happens. Right? Another example of a deferral, what else do we have? Oh, our unearned revenue, right? So if we're getting paid now for work we're going to do later, cash is changing hands now. We haven't earned anything because we haven't done any work. So that's another example of a deferral. We're going to defer that revenue to a later period.
Yep.
Does that help at all, Susan?
Yep.
Yeah, I think so.
Okay.
One thing that the text almost made it sound, and I can't remember the exact place, but there was one place in the text that the wording of it made it sound like you were just choosing not to pay a bill. Not that it wasn't due, but it made it sound like you were just choosing not to pay the bill until next month for whatever reason.
Oh, yeah. I actually kind of know what you mean. Yeah, the wording isn't quite right with what they do there. Really, they're just trying to illustrate that if you're not paying it now, you're still going to record the expense because you've used the service. But I understand what you're saying. Like, in reality, right, you don't get to just choose necessarily when you're going to pay that. So
right.
I see why you kind of feel like you're misled there, and that's understandable. Really, they're just trying to illustrate that we need to record our expenses whenever they're incurred, regardless of when we actually pay for them.
Okay.
Okay, so that's all. I'll just jot that down because I like to. Record all expenses when incurred, right, when service is used, regardless of when we pay for them. And then record all of our revenues when earned, regardless of when we get paid for them.
Okay. One thing that helps me is to understand like real life examples of, how this stuff all works.
Okay.
And so I'm sitting here and I'm seeing these examples in the book, where you prepay your rent for 6 months or somebody prepays you for 3 months of, whatever.
Yep.
What is the mechanism in an ongoing business for keeping track of that and remembering, okay, I have to do this for the next 3 months and then I'm done with it, when you're going to have more overlapping, say, next month? So like you may have $5,000 come in this month that's unearned revenue that, is going to cover like the next 3 months.
Sure.
And then next month you may have another $5,000 come in that's going to cover 2 more months or 3 more months.
Sure, yeah. Yeah, no, that's a good question. So with unearned revenue, if we're in kind of as you say, a better or closer to real life example, we're going to have a subsidiary ledger for unearned revenue.
Oh,
excuse
okay.
me, kind of like we would without accounts payable. So we keep track of who we owe the service to and how long we owed that for, just as we'd keep track of who we owe money to in accounts payable. So similar situation there. We'd have unearned revenue from XYZ Corp, unearned revenue from ABC, unearned revenues from Lowe's. We keep track of that on a subsidiary ledger. Yep.
Okay, that makes sense.
Yeah. Okay, what else you guys have?
Plenty. Just do the exercise, I guess.
Okay. Was there an exercise you wanted to walk through together here, Bharat, or?
No.
Oh, okay.
You done it. I mean, more so just to remembering
Okay, sure.
how to do it, because that's what it takes.
Sure, yeah, absolutely.
I think that's the majority of my questions and concerns as well.
Okay.
Yeah, I'm cool. I appreciated going through.
Sure, no problem. Well, I'll leave it up to you guys. If you don't have any other questions for now, you're certainly welcome to go. If you do, you're welcome to stay. I had this scheduled until 8, I think. So.
No, I'm cool.
Okay.
All right.
All right.
Yes, have a good
Hopefully
weekend.
this recording worked this time. Yeah, you too.
Yeah.
And as always, if you have questions, just shoot an email.
Okay. Thank you.
Okay. Thanks, guys.
Thanks. Bye.
Good night.